Hey, how you doing? It's 𝐤𝐴𝐡𝐚𝐭 from the First Home Buyer Club. 100 lessons in 100 days. Day 93, lesson 93. Today, what I want to talk about is what is lender's mortgage insurance. And then I'm going to briefly discuss extra costs that you've got to consider when purchasing your own home. So firstly, what I want to talk about is by the end of this session, I'm going to actually talk about 2 ways where you can completely avoid mortgage insurance. Although I should let you know straight off the bat, lender's mortgage insurance isn't as bad as what everyone thinks. And because here's the thing that I'd like to, get you to think about. It should be an opportunity cost and not a lender's mortgage insurance cost. Why? Because we all are concerned and worried that we don't want to lose money by paying lender's mortgage insurance. And as a result, and I'll be honest, I thought the same myself very early on. As a result, we spend years paying rent just to a point to get into position to buy. Now, it doesn't really make sense when the cost to save up that money far outweighs the cost it does just to get to pay the lender's mortgage insurance and then purchase straight away. And here's what I mean. So you got to think about this. You think the average family probably pays somewhere in the vicinity of $400 plus each week. That's nearly $21,000. And the average family also takes 5 to 7 years to save up enough money to completely avoid mortgage insurance. So you think about this, $20,000 or $21,000 a year times 7 years works out to be somewhere in the vicinity of what, $147,000. Yet, if you look on the flip side, if you were to purchase a home, and in the example I wrote in the copy, was on $500,000 purchase, but you go a cheaper home and it's actually less mortgage insurance itself. But if you think about it, it could be $15,000 compared to $142,000. Now I know when I look at those numbers, which one I'd want to choose. And then you weigh it up again one step further and go, okay, well, if I don't buy a home today and I save up over the next 7 years, then I buy it, what will happen with the market? Now, I'd like to think, look, property prices, we can't guarantee, and nothing can be guaranteed in life, but even if the property only moved up 10% total over 7 years, not even 2% a year, which is ridiculously low, they're then potentially going to lose another $40,000 or $50,000 compared to what you're about to buy. And when you start to add these numbers up, it could be up to $200,000 just renting at $420 a week, compared to $15,000 or $16,000 in lender's mortgage insurance. And when you weigh that up, this makes a massive difference, right? $16,000 or $200,000. And I know what everyone thinks, well, if you don't have a really big deposit, you shouldn't be buying a home, you can't be trusted. But at the end of the day, once you create that habit and that savings habit, it doesn't matter if you've been saving for 1 year or 6 months, 1 year, 2 years, 5 years, or 7 years, the same amount each week, month, year goes into the account. It just means you've been doing it for longer. But when you do it for longer, that you miss out on all the other things that come with it. And, I don't want to get too mathematical on this one and talk about, well, if you bought the house early and those extra payments you're putting into the savings account to get a 20% actually went in the home, you'd actually far outweigh in the same 7 years. You'd have a massive chunk of equity that you'd be able to use towards anything else that you wanted in life. Now, the part you're probably really curious about is, what are the 2 ways you can purchase a home and not have to pay lender's mortgage insurance? Here it is. Parental guarantors is one of the best ways to purchase your own home and get into the market. You can get in with little to no savings using a parent as a guarantor, and if it works out, you can also get a lot better interest rates than what if you were to do it yourself. And that's because there's, from the bank's point of view, they don't have to worry about the security for your house because your parents will guarantee it. Now, they don't have to give you money or pay money each week or anything else. They're just going guarantors. It's a limited guarantor up to 20%. That's all. From the 20% to the 100% mark, that's all secured by you, but the 0 to 20% is secured by them. Now, do you have to put all your money in, or do you have to put money into it? No, you don't. Can you? Yes, you can. So if you know right now we've got the $15,000 first home buy grant for another 7 days, you got a $25,000 home builder boost, but that's going to drop to $15,000 from January 1. But even that's $30,000 there, just those two. So if you had $10,000 savings, there's 40 grand. And if you were to purchase a $40,000 home, there's 10% straight away. You're already halfway to getting them released off title. Because here's the other thing. When you use a parent as a guarantor, you're not keeping them on for life. And with all our clients that do use a parent as a guarantor, we always create a 2 to 3 year plan where we want to power down the mortgage and pay off extra payments and get them released as soon as possible. Because in 2 to 3 years, you can build up a fair bit of equity. And then if prices continue to go up, you've got the chunk from the split from both ends. So that's one really good way. The other one at the moment, it's sort of, everyone's forgot about it a little bit because of the home builder and all the excitement there, is the loan deposit scheme. And there's still availability there. They just released 10,000 like a month ago or something like that, where you just come up with 5% and the government will back the other 15%. Two very good options to get in your own home with the cheapest interest rates possible right now and start paying off your own home faster. But like we always tell everyone, just when you get into your own home, don't just pay the bare minimum, especially at the start when you pay the most amount of interest. Let's really kick its butt, get it down, and you'll pay less interest per week and more of it will go to principal, and you'll live a better life. All right, guys, well, Christmas Eve, hope you have a good day. I'm personally looking forward to Christmas tomorrow. I'm flying back to Perth and seeing family, so it'll be good. I haven't seen most of them for probably close to 13, 14 months, so it'll be a nice break. All right, I'll talk to you later and enjoy your day. Bye.